I'm Greg Hunter. Welcome to USAWatchdog.com. With us once again from Europe, Egon von Greyerz. He's the head guy and founder at Matterhorn Asset Management. Egon von Greyerz, thank you so much for joining us today on USAWatchdog.com.
Greg, it's a pleasure to talk to you.
Pleasure to talk to you. And you have a deep career long before you founded Matterhorn Asset Management. You were a finance director, a banker. You've got decades experience in the markets, and you're kind of a full service guest for us over here. And plus, you're sitting in the middle of Europe, and a lot's going on over in Europe. I wanted to kind of, a lot of smart people thought that this would end a while ago, and yet a lot of smart people are thinking it's going to end this year. That it's totally unsustainable. Where do you think we are in this unsustainable, as many people have said, a scenario that we see in the global financial system right now?
Well, Greg, as I see it, it's all about risk, and when you protect risk, and one of our specialities in our business is wealth preservation, understanding risk. And when you're looking at now a world where risk is unprecedented, and we have bubble land, we have bubbles in stock markets, we have bubbles in bond markets, we have bubbles in asset markets, and obviously art markets, for example. And then we have, on top of that, we have the banking system, which is bankrupt, and we have the country risks, which are enormous, but also geopolitical risks. So when it looks like we are now, as I said, in bubble land, when bubbles can expand exponentially, but you can't actually break the laws of science. At some point, bubbles will burst. And as we look at the world, the most important thing is, of course, to protect against these bubbles bursting. And another analogy is, of course, the fire insurance analogy, which is you can't buy fire insurance after the fire. And so, number one is, from the point of view of investors, protect yourself, and then you come back to your question of timing. Yes, many of us have been wrong when exactly something dramatic will happen in the world and where it will come from. As I said, we have enough bubbles, we have enough black swans, and it's quite. I have realized also that you always believe that things will happen faster than they will do, because you see a problem, you think the risk is so great, it's going to happen pretty soon. But I have learned throughout a long life with a lot of experience that patience is a virtue. So I'm not really concerned about the short and when will it happen. What I'm concerned about, number one, from the point of view of looking at the world and our business, is that we protect ourselves. But coming back now, where are the biggest risks? Well, they are in so many different places. Ukraine is now quiet, for example. It can easily come back again. The problems haven't gone away, and they are major. I have always been critical of the EU, of the Eurozone, the Euro, and I've never believed that it would last. And of course, we've now seen signs for quite a few years of it coming apart, and Greece is extremely near. And you probably were aware that they now had to go, I think yesterday or today, to the IMF to borrow back their own emergency fund of 750 million, and that is the last money they have. Thereafter, and IMF has said they're not going to give them any more money. They will not be part of any solution. So they have said, of course, the EU have said, and the European Central Bank, that we have ring fence. Now the problem, if something happens to Greece, there will be no repercussions, no domino effect. That's absolute nonsense. Of course there will be, because next will be Italy, Spain, and France is, I think, also very close. So I think that there is a very, very good chance that things happen this year. And when it comes to timing, it's easier to look at technicals rather than fundamentals, because all the risks are there, the black swans are there, all the bubbles, one of them or two of them will fall down very soon. But from a timing point of view, it looks now like stock markets are coming to an important long-term secular top. It might have happened, or it's going to happen in the next few months. And the same with bond markets. Bond markets, in my view, are the biggest bubble ever in history. And we're looking at 100 trillion market of debt that will never be repaid. Most of it is issued by governments that can never be paid in today's money. So therefore, I think we will have, and I'm looking at also gold, I think it's going to happen this autumn. Is going to be quite dramatic, I think.
Which brings me to my next point, and when I said a lot of smart people didn't get the timing right, because I think a lot of smart people didn't realize at what length the criminality, the lengths they would go to. I was just reading the other day that, again, Citigroup, another bank involved in LIBOR, no prosecution. I mean, if that isn't massive manipulation, and nowhere is there more manipulation that you could see on a chart than the gold market. And does the manipulation actually help the central banks, or does it actually hurt the central banks? Because I've heard many people say, Peter Schiff, one of them, has said, they're making it worse. They're making it far worse by what they're doing. What say you?
Yes, of course they're making it worse. Manipulation is only delaying the inevitable. And by doing this, of course, they hate a high gold price. Governments and central banks, because a high gold price is a sign of mismanagement of the economy and of destruction of the value of paper money. So therefore, that's why they're doing everything they can to keep it down. And you can see now, for example, because there's a thin market now in gold. I recently talked to or visited one of the top refiners here in Switzerland. And they told me that, of course, they're working around the clock as always. They're not working, they can increase production, so they're not working at absolutely full production. But remember that they are, every year, 2,500 tons of gold is produced by the gold mines, and we have another 1,000 tons of scrap, and all of that is being refined and sold. With China and India to take about over 2,000 tons of that. So and the rest of the world absorb the rest. So the physical market remains strong. The demand is there continuously, but the paper market, as we know, and we talked about this many times, is of course a lot bigger. And they are manipulating this. And you can see it now in the thin market. And when we talk about the thin market, we have to remember, it is not the physical market. The physical market is strong, and there's a constant demand. But the paper market, which is over 100 times as big as the physical market, there you see the manipulation. Now, for example, we see now every day there's a $10 move up and a $10 move down because they can just play with it. It won't last, and at the end of the day, they're making it, all these, the governments, the BIS, the central banks who are doing this, the Bank of International Settlement in Basel, that is the central bankers' bank, they're all there. At the end of the day, they will have a much bigger problem to solve, and this is why one day that market will erupt. The gold market will totally erupt, and especially when the world realizes that the central banks haven't got anywhere near the gold they say.
Is the key here the bond market? You said it was the biggest bubble ever. Is that going to be the trigger that people go, oh my gosh, we've been told, we said this in pre-interview, I said this to you, and I've said this many times, we've been told that debt is money and debt, bonds, are an asset. We're going to find out neither is true. Aren't we going to have a collateral problem? If people are going to not trust the collateral like they did back in 2008, no, I don't want your bond. No, thank you. Aren't we going to have, is that going to be a trigger for the gold market that things are going to turn around in a hurry?
Exactly. I had somebody again, in the last few days telling me, can't we just forgive all that debt and forget about it and write it off? But as you say, there's another side to every balance sheet. There's another side. If you write the debt off, what about all the people who are actually lending against that debt? What about all financial positions that are leveraged against that debt? So you're talking about here a government bond market in worldwide of something like 60 trillion. Total bond market worldwide is over 100 trillion, and has grown just in this year several times, in this century several times. So if you think about that 60 trillion just in government debt, and then you look at what the investors have done with that, as you said, that is collateral for leveraging 3, 4, 5, 10, 20, 40, 50 times, depending on the institution. And if the values all of a sudden of that government debt starts declining, which is guaranteed that it will do, as you know now, all government debt is at virtually, interest rates are at zero in so many countries, or even negative. And if that bubble starts bursting, which it will do, that I think is going to be, and we haven't even talked about the derivatives. Most of those bonds are directly, and interest rates are directly linked to the whole of the 1 quadrillion derivatives market. So if you look at that too, the combination of all of that and the leverage that will go out of markets, because when these bonds fall and the implosion we will see, that is going to be so big that the world can never cope with that, never, and the financial system cannot cope with it.
And you're saying that you think that's going to be the trigger that is the teeter-totter of gold, bonds, debt, gold, debt, gold is the anti-debt. And you're saying that's your trigger. The bond market, watch the bond market. When it fails, gold's taking a moonshot?
Absolutely, yes. The trigger will never be gold. Gold is really the consequence of the move in gold, or the move up in gold, which we will see, is the consequence of these problems. So, yes, the trigger can be anything. It can be a little bank anywhere. It can be Greece. It can be a stock market. But the big moves in the world will start when people realize that these bond markets worldwide are just a massive bubble, and it's money and paper that can never be repaid. And that is when the real problem is going to start.
Didn't the Bank of International Settlements, which I think is in Switzerland, come out and say and admit that the derivative market is a quadrillion? That's the official number. Some people say it's 2.5, 3 times that. They say it's way bigger than a quadrillion. 1,000 trillion? How is that manageable? How is that containable? You don't need a big loss to wipe out the entire global system. A few percent and poof, right?
It's totally unmanageable, because most banks are if you look at it worldwide, are leveraged in a way where they're totally undercapitalized. If you value their assets properly, they're already in default, these banks. And that's when you talk about leverage between 10 and 50 times. Take Deutsche Bank at 50 times. Because banks are officially slightly less leveraged, but they have, you take a JP Morgan, they have more or less 100 trillion in derivatives. There's no capital there. There's no backing. There are no reserves against this 1 quadrillion plus derivatives worldwide. And it is, as you said, that 1 quadrillion is probably a lot bigger than they're actually, because we know that derivative market is increasing. So no, there is nothing against that. That is just, it's just going to say, oof, it's going to be an implosion. You won't even be able to see it's going to go so fast.
What are your clients? I know you have a couple of gold. You store gold for people because one of your main things at Matterhorn Asset Management is wealth preservation. It's the main thing you do. And what are your clients who store their gold in your vaults, which are secret? One of them's in the Swiss Alps somewhere. I'm sure you have armed guards and the whole deal. But what are your clients? What do your clients tell you? You're dealing with some rich people, and they're freaking out by taking their money and sticking it into gold and putting it in a secret vault. What do they tell you?
Yes, we are fortunate that we have the kind of clients who understand what the risks and understand what we are saying, and therefore they are buying gold and holding gold for wealth preservation purposes, not for investment purposes, not to speculate, not to sell if there is a temporary increase in the price of gold, not to take out at the low of the market, which the normal trader investor does, buy high and sell low. But they are there. They hold the gold as insurance against their other assets. And then it's only a question. We have clients who believe strongly in wealth preservation, who have a very, very high percentage of their money in gold, of their financial assets in gold, well over 50%. And we have investors who have maybe 10%. I think we probably don't have anyone who has less than 10% in the market. So these are people who understand gold, and these are people, of course, we have to add, who are fortunate enough to be able to afford gold, because you have to remember that this is only much less than 1% of world financial assets which are in gold today. So the majority cannot do that, and the majority has debt rather than assets of gold. So they can't protect themselves, and this is going to be a major problem for the world. I mean, you haven't discussed yet pension funds. I mean, first of all pension funds in the world are underfunded. They're still assuming even today they're underfunded, and they're using projected return rates of 8%. They're not going to get 8%. Even now, the last few years, they're getting much less than that. And so pension funds, in my view, will be wiped out, and so will, in the US, for example, so will IRAs. And what isn't wiped out and what is still there, the government will probably force savers to put into government bonds. So there'll be very little money left for pensions.
If you have like you said, 1% of people, rich people have money in gold. To have a panic, you don't have to have everybody panic. You need 2 or 3 or 4% of the really wealthy people to start panicking, and then all of a sudden you've got an out of control gold market. Do you not, or am I wrong?
No, you're totally right. And I mean, we can take the example just to prove the point you're saying of a housing market. You can take the U.S. housing market. It's enough if you in the U.S. housing market have one seller of a house and no buyers, that price will go down to 0. And it's the same in the gold market, but the other way around. All of a sudden now, first of all, you have to remember you have the massive amount of paper gold which is outstanding, and that amount there is no physical against that and can never be produced. On top of that, as you say, if now it's not just wealthy people, I see, if I'm correct, because I think there will be a very, very high risk of inflation or even hyperinflation in many countries, because governments will continue the only solution they know, which is to print more money. Because they've tried everything else now. They have no weapons left in their armory. And it will be more money printing. And if you get that, you get then, as I said, high inflation, and then institutions, insurance companies, pension funds, etc., they will be told by the trustees that you have to inflation protect a little bit of or some of your assets and by buying gold. So they have now also, I think institutions average have about 0.5% in gold today. And if that goes up to 1 or 2, you can imagine there will be no gold available at these prices. So if they say they will want to buy for $1 billion of gold, they're going to get maybe half or a quarter or less of what they could buy today for the same amount of gold. This is what
a couple more questions, and we'll wrap it up. But Harry Dent and people like that, also David Stockman, they're predicting that there would be so much debt destruction, deflation, bonds being destroyed. I think everybody thinks the bond market is a huge bubble.
Yeah.
But a lot of people are saying, some people are saying that, well, when this blows up, then the dollar will be the place to be, because there'll be so many dollars destroyed that's where you want to be. What's your view when this thing blows up? What's your view on that?
I think, as you know, all the currencies are going to go down to 0. They're already down 97% on average in the last 100 years. So the last 2 3% is not a big move in relation to what they have come down. We will soon see the last move starting. I think that, I mean, it's all a relative game. It doesn't matter which currency you talk about, they're all going to lose out. But if you talk about the order and which one will be next, I think it will be the dollar. I think the dollar will lead this. The world will just not want to hold dollars. So I absolutely not believe in now when this starts.
And what do you think about them changing the currency to an SDR, that kind of thing? You know, a lot of people are pointing towards this fall. You mentioned earlier that you think fall, that things are going to fall out of bed. That's a big chance that things are going to fall out of bed. Is it moving to the SDR going to be the cause, or going to be the solution, or are they going to do that? What do you think about the probability of the thing falling out of bed this fall, and why?
Of course, they will try to create instruments that nobody understands, and I think that will be another artificial currency that they're just shuffling the deck and with the same bad cards. It's not going to have any effect. And then if the West tries then with an SDR, then the East, they're wiser. China, Russia, India, they're not going to agree with that. And then maybe the West tries to do a gold, partly gold back, or gold being one of the constituents in the SDR. I'm not in favor of that anyway. I do not like gold being part of what governments do in any way. I prefer free gold, a gold price that is set by the markets and by supply and demand, with no influence by paper markets. Of course, that's the real gold market. So yes, they will try SDRs. I absolutely agree with that. It will not be the solution. It might last for a little while, but the big parts of the world will not accept it, and they will realize it's just another paper currency that has no relevance at all and will not solve the problem in the world.
And finally, war card. Might they? I mean, this sounds to me, you got $100 trillion in derivatives, you got all this debt, and if it blows up, there's going to be some desperate countries that are not going to want to say, oops, well, we just made a mistake. They're going to want, are they going to want to take us to war? And are you worried about that just blowing the financial system sky high if and when there's a major war to kind of cover this up or blame this on or whatever? What do you think about war?
You know that a lot of people think that I'm very pessimistic and somebody who's forecasting doom and gloom. But I'm not. I've actually, as an individual, I'm very optimistic. But what I'm looking at is risk. I'm only looking at risk. I'm seeing that the risks in the world, and now we're talking about the whole world, are unprecedented. And I'm saying that the risk of something erupting is so major. And then if you look back in history at what desperate countries do when they are under financial pressure, they start a war. Of course they do. And the U.S. has already started quite a few wars in the world. And we remember Bush, for example, blaming the war, and that's why we have to borrow more money, blaming the war. And yes, that is not impossible that war will also escalate in the world, and more and bigger wars will be started. I hope it's not the case. I'm not going to sit and forecast that here because I don't know. But if you look historically, the risk is very, very high.
Egon von Greyerz, Matterhorn Asset Management. Also, your website, goldswitzerland.com. That's where you actually sell gold. Matterhorn Asset Management, I believe, is the storage arm of your business. Is that correct?
That's correct. Yeah, that's our goal.
I just wanted to get that out, that there's two sites there. I'm going to list two sites at the end, Matterhorn Asset Management and also Golds. I'll just list goldswitzerland.com at the end. But thank you so much for joining us, Egon von Greyerz. Thank you so much for joining us from Switzerland and giving us, your view from outside the U.S. We love it. Thank you so much for coming on and taking us to school.
Greg, it's a pleasure to talk to you, and especially in these extremely interesting times, and I think we will have a lot more to talk about in a few months' time again.
I'll have you back if you're willing to come back. Thank you very much for coming on.
Thank you.